Is the glass half full or half empty? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Monday, the 10th of September. My question has always been, who is the glass maker? Yeah. Okay, George Soros, the legendary currency speculator, over the weekend is telling everyone his ideas on the euro crisis. Mr. Soros indicates that Germany is the problem and needs to compromise big time with its euro partners. That remains to be seen, as the German courts on Wednesday will vote on what Germany can and cannot do. This week is packed with news coming out of Europe, plus, of course, we have the Fed possibly making a QE decision later this week. One thing is clear, and that is inflation is on its way. That is the reason why gold, silver, and copper are all headed higher and in the early stages of a bull market. Now let's go to the charts and our trade triangles and see what's happening. But first, let's take a look at what we put up on our blog. We actually have a poll right now. This is a 100-year chart of capitalism going back to the turn of the century. And it illustrates how long some of these sideways movements can go, this recession, depression, whatever you want to call it. For example, in the 30s, it took 17 years from the peak to the new bull market to start. Then in the 68, it took 18 years. And we're about 8 or 9 years and counting. I'd say probably a little longer than about eight years and counting right now. So we still have some time left to go. Actually, I'd say probably we're 12 years and counting now. This graph's a little bit old, but the reality is I don't think we're going to get out of this soon, but you can voice your vote and your opinion. We just put this up just minutes ago. Right here, you can improve. It's not going to get better anytime soon. That's 47% of the votes are coming in there. Is going to improve in the next 12 months. That's only 27%. And 26% of the votes are saying it's going to stay the same for the next few years. So you can see how that's going to work. So, but tell us what you think and give us your vote. But let's go to our Market Club manager and look at the S&P 500, which is plus 90. We talked about this last week. Market's acting extremely well. We're at the top of the Donchian trade channel, but that doesn't mean, let's say, we can't see a pullback. But if we get a pullback, let's say, down to the 1420 level, I think that's an excellent area to be getting long this market. Our original buy point on the monthly trade triangles came in here at 1415, but if we scope this out, you can see basically this is a huge energy field in this market, and what we've been saying is that the potential for this market to go much higher is there. And if we just take a simple trend line, which we can do right here with Market Club, click here, add a trend line. You'll see the little yellow box come in here, and then simply draw from this point here through to this point here. You can clearly see we've had the breakout, and if we measure from these levels right here, it gives us pretty much a target zone of about 1550. That's 115 points from where we are right now. So I think the market's going to be pretty stable this time. If the Fed comes in on, I think it's Thursday they come out and say they're going to add an unlimited QE, then this market's going to take off. I mean, people are going to rush into inflationary protection measures, and that's going to be stocks for the time being, but of course, gold and silver and copper. So let's go to our next market. The next market's the Dow. Now, the Dow is a little bit different. It hasn't quite cleared those ranges we talked about, but it's still, again, this is the market still making that turn, and I think we'll see that market improve. It's plus minus 55, still indicating a trading range, but we're getting very close to making a turn on the weekly and also on the monthly. So let's see how that plays out. Now, on the NASDAQ, completely different. We do have a plus 90 strong upward trend. Strong upward trend, plus we have the energy field that's capable of carrying it quite a bit higher. And also we put another index we'll be talking about a little later today that I think will be very, very interesting. So let's go to our next market, and the next market we're looking at is, of course, crude oil. Now, I'm going to scope this in just a bit closer to give you an idea of what's been going on here. And really not a lot has been going on. You can see really since this date, well, I'd say probably this date right here, the 23rd of August, we sort of have been going sideways for the last 3 weeks. And if you look at the weekly charts, which is really interesting, you can see how we've been closing just pretty much flat, 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 doji, doji, doji. So we've really been very flat. We closed actually lower last week, which is a surprise to anybody. So there's a real battle going on between the bulls and the bears. And the battle is really taking place. We'll go back to the daily. The battle is really taking place between two key levels to watch. And that is on the downside. You're looking at this level right here. And that's 94. And you're looking at this level on the upside. And that's 98. So that's where the battle's being fought right now, between the two levels. But if you look at our long-term monthly trend is still negative. Our daily is also negative. The only one that you have positive right now is the weekly. And that's from 87.50. We're currently trading at 96.02. So that worked out really well for intermediate term traders, and that's how we trade this market. We trade it with a weekly for trend. So this would be for the trend. And this one here, the daily, is for timing. So right now you'll be out of the market because you have uptrend here and you have a downtrend going with the daily. So you'd be out of the market clear. You wouldn't be short, you'd just be out of the market waiting for a new signal to come in. So that's how we would play that. So let's go clear the screen and go to our next market. And the next market we're going to be looking at is going to be the euro against the dollar. Now this is very interesting because a lot of people are very, very negative, ourselves included, but we do change. You have to change in the market if you want to be successful. But again, you can trade this market using the monthlies or just the weeklies. Now we were short from 138. We got a signal at 127.47 right here. So we made a nice profit on a long-term monthly, which have proven to be very, very accurate. And just to give you an idea of how accurate they've been, we'll just scope this out for, let's go to the 5-year. And let's just make this a cleaner chart because we'll take the Donchian trade channels off because they get very tight, and also that. So you can see really pretty clearly indication is sell, buy, sell, buy, sell, buy, sell. So you can see when the monthly comes in, it lasts for several months, and in some cases multi-months. So here we just took the signal at 127.47. It's 127.85. I think we're going to see this market do better for the next couple of months, and I would not be surprised to see it trade up to the, let's scope this in, would not be surprised to see it trade up to, I need more room than that, so let's go a year. In fact, let's do a 2-year. Not be surprised to see the market trade back up to the 135, which is right here, and also the 138 level. Now, how did I pick those numbers? It wasn't just out of a hat. We were looking at these numbers in terms of a Fibonacci retracement. And if we take our Fibonacci tool here, which is right here, again, you need to, let me get control of this again. So if we take our Fibonacci tool right here, it says Fibonacci right here, and we go from the highs right here, drag it down to the lows, you can see we're getting 134.81 and 138. So that's the target zone I would think we'll see this market going, and that's pretty much where we think the market should find resistance. However, this market surprised a lot of people who were looking for this market to go a lot lower. We got within 27 pips of our target zone of 120, and we've sort of reversed. But again, these monthly signals do not come in that often. So when they do come in, you really want to pay attention to them. The last monthly signal we had in this market was right here, and that's on the July 7th of 2011, and that was at 139.69. Big move down. We've just had a new signal on September 7th at 127.47. So you can see that's a nice profit, but nonetheless, that is a change in trend, and you want to pay attention to it. So let's go on to our next market. Next market we're looking at is gold. Now gold we are bullish on. We have been gold. All of our signals are bullish. And one of the reasons for that is because this is the most recent high we've seen. And this is back in September, almost a year ago to date. We saw gold trade as high as about the, I think it's the 1940, 1920 level. And that was the high. Then we had a pretty big move down, and sort of moving sideways here. Now the key thing to me is this trend line that we can draw quite easily from here, the highs we saw a year ago in September, and draw that down here, and you can see the markets, you can either use this point here or this point here. Either one, they're pretty good, but nonetheless the market's broken up, it's taken off to the upside, and if you put some Fibonacci numbers in here, starting from the high here, and let me go there, get that correct, and we go all the way down here, we get that 50%, 61.8% retracement perfectly. Now it's starting up. I think we could see gold, and I'll just be very bold and say this, I think we can see gold take out these highs and trade over $2,000 an ounce. And I think it's all going to be based on the QE and inflation fears. So that's where we're looking, and that's where I think we'll see a lot of people paying more attention to gold. And you do have, of course, this big, what we call an energy field, and this major breakout right here. So all of our trends, our indicators are positive. You can see we are plus 90 in monthly, weekly, and daily, all indicating higher levels. So let's pay attention to this market very, very closely. So let's clear the screen and go to our next market. Now the next market we're looking at is copper. Now copper has made a turn. Let's just put a line chart on here. You can see we had a monthly trade triangle kick in at 3.56. Remember the resistance was 355. Shortly after that we got a signal. We're currently trading at 3.68, so we have some nice profits in this position already. And it looks as though you've also broken a trend line in that market, and I'm going to draw it from this level here down. So that's pretty accurate right there. So you've had the breakout, the momentum's turning, and I would suggest we could trade up to the $3.90 to $4 level in copper. So let's go to our next market. That's silver. Now silver market, we're going to go from the highs again. This is a very simple, powerful tool, a trend line. Just click here, you get the yellow box here, and just drag this down. It's almost perfect. You can see the breakout. You see the monthly kicked in shortly thereafter at 31.31. You can see it right here. And we're currently trading at 33.49. So we've almost got we have $2 profit in this position right now, and it looks as though we're going to see this market go considerably high. Is it going to get back to these levels? Yes, I think it will. I think the euphoria we'll see in the inflation front with gold and other hard assets commodities going up is going to push this market much, much higher. I think we've just started in this trend. And as I say, we get these signals and they tend to last quite some time. In fact, if we go out now, you can see a signal that we had here this is back in May of 2010, and the market rallied from that level, which was, let me just scope this out for a second. We rallied from the $18.74 all the way up to $49.50. So that's a big move. So just a little shy of $50, but nonetheless, I think this time we'll go over $50. So let's go to our next market. And we're all going to show you a special index that we found that is interesting. Just gave a signal today with all of the trade triangles, so you want to watch that. Now this is the Reuters-Jeffries CRB index. Now this is the key that we see potentially happening here. I'll scope this out even further, and you can see this is the all-time high right here, at least this last big run-up. So we want to draw a trend line from there. This is the one thing I think it's holding this market back, even though we put all of our trade triangles positive, but this is going to be the accelerator when we break over this line. So we just haven't got there yet. We're getting very, very, very close. So you also have a trend line you can draw from here down as well, which means that has been broken. So the 320 level to me is a pretty psychological one. I think we can break through that, and then I think we're off to 360 and possibly even touching these levels. It depends on what happens to crude, which is still in a sort of a sideways market. But I promised you another index we'll be looking at. Let's take a look at that index right now. So what I went to is our trade triangles, which we've talked about before. Now this is something we actually put in these are recent trade triangles. Now we want to sort the equity markets by volume. So I want to do average volume greater than 2 million every day. And I want to look at our monthly trade triangles because they're the ones for stocks really dictate the price. So I'm going to search, not since yesterday, obviously that was Sunday, but search today. So I scan, click scan, and you can see in a relatively short period of time, we bring up a nice list. Now what caught my eye was this iShares MSCI Taiwan Index. Obviously Taiwan is part of China. I guess you could say it's part of China, but it is certainly Asian, and that's where all the Apple books, iBooks, iPads, iPhones are all made. So let's take a look at the chart. So here's a chart of the Taiwan Index. Now you can see, I'm going to take the monthlies off just for a second, but you can see this has sort of been going sideways for a while. But you also have, from the highs here, you can simply draw a trend line. And you can see how it intersects just beautifully. Excuse me. To scope this in, you can see basically you broke through there very convincingly. And you also have what I like to say is a twin valley. Let me explain what I mean by that. A twin valley is something where you have a, now you talked about pivot point. Here's a pivot point. And here you have the first valley. Some people call these double bottoms. I like to call them valleys. And then you have the second valley right here. So basically, the market's moved down, up, down. We've just started the move up now. We've taken a little pivot point out right there, which is capable of carrying this up to here. But if we clear this level right here, and I'm going to say that's 1375, let's say, 1375. If we clear that level, then we'll probably go another 225 higher, or 250 higher, I should say. From, if we subtract 1150 from 1375, it gives us $2.25. So I think we'd be going to the 16.25 level, which takes it right back up to these levels right here. So I think that's potentially where we could go. Percentage-wise, it's a nice move. You're talking about a 30% move potentially on this trade. And you can see where if I clear everything off the screen and we look at our trade triangles, you'll get an idea of where we are. So the trade triangle came in at 1285. It's currently 1286. So it's just started. This is an index. It's an ETF. And it's an iShares, symbol EWT right here. I'll put that down on here for you. So the symbol is EWT. It's an ETF. It's an iShare. And we had a signal right here today at 1285. So if you want to catch something, maybe give you some diversification from the US markets, this is a signal indicating that this index should be bought. So I'm Adam Hewison for Market Club. We've gone a little longer today, but it's Monday. We want to give you as much as we can. And we'll be back on Tuesday. Same time, same place. The updates are coming. And have a great trading day. And don't forget to participate in our blog. And you can just vote right here. What are your thoughts on the economy? We'd like to know. So please give us a call or come online. Check us out on this blog and see what you think. I'm Adam Hewison for Market Club. I'll be back tomorrow. Have a great trading day.